The stock market just did something very, very surprising that I want to show you guys in this video here today. Welcome in, folks. If you're new here, I'm Jeremy. If you've been here for a while, howdy to you. I'm going to take you guys through some stuff that was very surprising that happened in the stock market, and I think it's very telling about what this market really wants to do right now, and I'm going to take you guys through that. But before that, I want to take you through something that I think is very, very important. Obviously, we're just about to finish up earnings season here. It was another huge earnings season, a lot going on, a lot of moving parts. And I thought this was very important to bring up, okay? And in these earnings time periods, a lot of people get caught up in the short-term numbers and they start making buying and selling decisions based upon numbers. If they're better than what was expected, they buy the stocks heavy. If they're worse than expected, they sell the stocks off. They don't buy the dip if those stocks do go down, things like that. And a lot of times folks can get tricked into the short-term numbers essentially, right? And so I want to show you a couple examples here of how you can't really trust short-term numbers, and you've got to just stay focused on the long term with companies in general and really think about it from the business model's perspective first, right? Because there's a lot of things that can happen that can hurt a company's revenues in the short term or their profitability, or make it better in the short term. And you can't get too hyped or too down on those moments. And you got to always stick with the 3-year out, 5-year out vision, okay? So a good example of this is Tesla, right? Tesla almost doubled up revenues from 2017 to 2018. Now, from 2018 to 2019, they actually had a troubling situation where they were having trouble ramping the Model 3, and the business was just not in the best place during that particular time, right? And so growth came for Tesla, that's almost like growth coming to a standstill. 21 billion, then you only go up to 24 the next year. That's horrible. And so during this time period, Tesla stock obviously sold off extremely heavy. I was obviously a buyer of the stock during that time period, but I understood kind of where Tesla was going over time versus what a lot of folks were looking at as numbers, and they thought Tesla was done. They thought the growth numbers were done. The big growth days were behind the company, right? And they just weren't looking at it from like the full picture. They got really caught up. Look at something like this. In the second half of 2019, Tesla's revenue fell 3% and earnings fell 45%. I mean, if that's the only thing you look at, there's no question you're selling Tesla, right? You're selling that stock, and you're certainly not buying the dip as that stock went down and down and down, because you're only looking at the numbers, right? And that's why I always preach, like, if you want to be an individual stock picker, it's more than just the numbers. You've got to really be able to forecast how the business model is going to do in the future and why you believe it's going to do well or not well in the future, because you can get tricked into the short-term numbers in a massive, massive way and make some really bad decisions based upon a company didn't hit this number or that number, or they're slowing growth or whatever, right? And you even look at what is usually respected the most in terms of public companies ever. You look at a company like Apple. So Apple is a stock that you could have sold off many, many times along its history, right? Just over the past 10 plus years. So look at this here. 2012, 2013, much slowing growth. So they grow almost 50% revenues from 2011 to 2012. But then hardly grow when you're coming off 50% type number, right? Hardly grow from 12 to 13. And then once again from 13 to 14. So you could have easily sold out during this time period and been like, man, Apple's having trouble growing anymore. I don't really want to be part of this stock, right? But if you're looking at the underlying fundamentals of the company and you understood the next generation of iPhone that was coming, which all these stuff comes out way before you ever get to see the product out there, right? In 2014, it was known that Apple was going to end up announcing essentially a large smartphone, right? Which was, I think, the iPhone 6. And that was the first time ever. And that was going to be a huge deal, no pun intended. And the reason being is Apple had never, ever had a big smartphone in the market. And Samsung was kind of dominating that market, right? And so at the end of 2014, they launched that phone and they tear up the numbers in 2015, right? Next thing you know, revenue shrinks in 2016. And that could have definitely been a good reason to be like, oh, shoot, Apple's done. Their revenues are declining. I guess this business is going under, and I better get out now, right? And you could have made the decision to sell out of that stock at some point in 2016, right? Then they get back to growth. Then look at this, 2019, their revenues shrink, right? And so when it comes to this, you just got to look at these things from a 3 to 5 year out perspective always, and think about where the business model is going over the next 3 to 5 years, not where the business model is at in that particular quarter or even that particular year. You got to always stay focused on the long term. And I understand in a market that's very driven around earnings and these earnings expectations and the quarterly reports and things like that, It's very easy to get caught up into the short-term stuff and think like, oh, this business is done or something like that, when really you should always be focused on the business model and where that's going over the coming years. And just because they report a great quarterly number or a horrible quarterly number doesn't mean that business model is off to the moon, and it also doesn't mean that the company's trash, okay, or garbage. That's just not the way this works at all, okay? So that's very, very important. Stay focused on the long term there, guys. Even with the best of the best companies, even with the best of, I mean, like, it doesn't get better than the companies like Tesla and Apple. Even with those companies, they miss numbers, right? They'll even have time periods where their revenue growth isn't impressive, or even in Apple's case, several time periods where the revenue actually went down. And those were just simply by the dip opportunities if you just stayed focused on the business model, right? So I told the private group this earlier, and I thought, I gotta share this with YouTube as well, because I think that's really, really important, what I just talked about there, okay? Alrighty, guys, so let's talk about this market here. A very, very interesting kind of time period we're going through in the market, right? So, the Hong Kong stock market, again, just crazy. Up another 7% last night. I mean, in a matter of a few days, this market's just gone beast mode. I mean, look at this. It's like a 15% type move in a matter of a couple trading days. Like, that's just ridiculous. Just absolutely ridiculous the way that market's moving right now. But that's what's going on, right? So Russell had a good day today, about 1.69%. The NASDAQ had a good day, 1.3% up. The S&P 500 had a good day. The Dow had a good day. And obviously, the Russell outperformed all the other indexes, which is something I obviously like to see as somebody that's been placing my chips heavy in small cap stocks. VIX spiked down today again, so down to 25. So still we're at an elevated level, but it's going down, and that's usually what happens when the market starts going up. But the thing I thought was most interesting with today's pricing action was the fact that oil was actually climbing. And although oil was climbing throughout the day, the market stayed strong, which was very, very intriguing. Here I think oil was 107, maybe not that high, 103, but that's off of, it seemed like it was just yesterday, literally, when it was 95 or so. Look at this, 95 range we were in oil. So for oil to move up that much, that fast to 103, that's a massive move for oil, right? In a very short amount of time. But despite that massive move there, that's about a 9%, 8%, 9% move there, right? Absolutely insane move for oil. Despite that move, the market's moved up very, very nicely, despite oil going beast mode, which is a very, very different scenario than we've had. And this is extremely surprising because, what it has been recently is if oil spikes up huge, the market goes down huge, right? And so for today, the oil to spike up like that in an insane manner, and the Russell to move up huge, and the NASDAQ to have a great day, I would say it's very, very surprising. Let's just put it that way, okay? Now, we're going to come back to some of these stocks and talk about these in just a moment, but I thought it was worth mentioning, okay? Travel stocks. Some of these travel stocks surprisingly ended up finishing green for the day, despite, once again, oil having a beast mode day. I mean, look at this. Uber was up, Airbnb was up, Royal Caribbean was up, Wynn was up, American Airlines was up, and United Airlines was up. That was very, very surprising. I mean, on a day when you see oil up 8% plus, you would just assume travel stocks have to be down. And yet, several of those stocks finished up. And some of these that went down, they didn't even go down much. Like, the biggest mover down was Hawaiian Airlines at 1.1% down, right? So, and we're going to talk about the rest of these stocks in just a moment here, but I want to just kind of finish off this thought around this, okay? What this tells me is like the market just wants to go up right now. The market doesn't care about anything now. Now it's just all of a sudden focused on going up and going up. And when I say the market, I'm talking about the algorithms potentially, and I'm talking about big money. It's clear as day. And it doesn't mean it's going to necessarily continue or something like that. You can't draw too many conclusions. But the fact that you see oil go crazy on a day like today, and the market ends up moving up, that just shows you that all of a sudden market doesn't care about oil anymore. It's like, whatever. And it's just funny how the market kind of gets in these time periods, right? Where if it wants to go down, it'll find a reason to go down. If it's like, oh, oil's up or this or that, it'll find a way to get there, right? And on the flip side, if the market wants to go up, it will just, I don't care whatever's going on. The wall of worry that we had just a week ago or 2 weeks ago, almost all that stuff is still there, but does the market really care? Not really. You know, you can say, well, oil hasn't gone too insane, so maybe that's coming down a bit. Maybe that brick's kind of slowly getting destroyed. The Fed didn't go crazy, so maybe that brick's starting to get a little destroyed. So, you know, the wall of worry maybe is starting to crumble a little bit at least, and that's some good news, but it's just interesting that, you know, on a day like today, the market can move up with oil, you know, spiking up like that, okay? Now, if we look at some of these moves and some of these stocks today, you know, once again, another massive day. RVLV today, you know, great move up for that stock, about 6.5%. And just a phenomenal day. If you look at Beyond Meat has now climbed about 20% in the last 5 trading days. Just a big move, well over 25% from the lows it reached on March 15th, which was just a few days ago, essentially. Incredible move there. Smile Direct Club, a 5% move. Look at this one, okay? You know, 24% move in a matter of days. And this is a point I've been trying to make for like the last month or so. You know, I was telling folks, man, whenever the market starts flipping, get ready for some absolutely epic moves. And you start to see this. This is just a small glimpse of what you can potentially see in the future here. But you know, it happens in days, and all of a sudden it's like, really, that stock's up 24% in like 2-3 trading days? Like what? No news. You look at something like the Chef. Obviously, it hit those lows on March 14th, and ever since then, it's just been coming back very strong. PayPal's coming back very strong now, almost 15% up on PayPal in the past 5 trading days, for instance. That one's, you know, obviously PayPal's just another one of those stocks that great business model, great company, and it just got thrown out completely. I mean, the stock was trading at like $90 a share not that long ago. It was silly. I mean, this is just ridiculous. You know, 92 a share on March 8th. Like, come on, man. You know, like anything PayPal under 100 is just, it's stupid. Like that's the thing. It's not even like you can't justify it. It's just plain dumb. You know what I mean? And that's the way the market gets sometimes in these time periods. If you look at Tesla, nice kind of bounce back here off the lows March 14th at $7.59. It's already up $100 plus a share in a very short amount of time there. A lot of other just kind of 1%, 2% type movers there. If we go ahead and look at big tech on a day like today, you know, obviously Tesla was the big winner. It was interesting. AMD did not have a good day, down 3% there on AMD. As far as PayPal, once again, great day. Netflix come back, and it was funny because, you know, a few days ago I said, I never thought I'd say this on the YouTube channel, but Netflix actually is a deal. And it has been recently, right? And, you know, $3.30 a share, $3.40 a share. Like, come on, man. You know, it's got to be Netflix. You know how far Netflix has to be down for me to feel like Netflix is actually an interesting value proposition? Oh, gosh, okay. Intuit's had a nice bounce back here. Amazon, 2.7% here today. 6% move from there, essentially. Meta's starting to come back now. There's another one that's just got silly pricing on it recently. I mean, look at this. Just a few days ago, 186 a share. Come on, man. Like, this is ridiculous. There's no other way of putting it. You can't even, like... You can't justify these type of moves when they get down these prices. Like you can't even justify Meta at 207. That's still just silly, okay? Now, if you want to add on to the what this doesn't make any sense type stuff, look at the Chinese stocks here today. So with the Hong Kong stock market moving up 7%, you would have thought, okay, all the Chinese stocks are going to move up and have another great day, and no, they didn't. Baba down 4% today, Tencent down 7.6%, JD down 3.3%. It's like. Like what? It should have been another good day for Chinese stocks, considering the markets were all greatly green, and considering how strong the Hong Kong stock market was. And no, it just those ones didn't participate today, and they actually went down, which just is man, the market's always a hard one to kind of figure out in the short term. Plant-based stocks today, obviously Beyond, we talked about that one, did really good. Tattoo Chef did really good. Oatly didn't really do too much here today. Retail trader investor stocks. This is interesting, right? So check this out. Space, 12.5% move now for this one. Just another one of those stocks that, my gosh, what an insane move there. That one I've never been able to buy just for the mere fact that, what they're doing is so dang hard. And I don't know when that company could ever be profitable or if they'll ever be profitable. If I get into a stock that's not profitable, I got to at least feel confident that they're going to get to profitability within the next 1 to 2 years. I can't say that with a stock like Space. I just can't. And so if you can't, I can't get in it, right? Hims, 8.5% move here today. Big move for that one. Fubo, 14%, just in the matter of the last 5 days, for instance. And from these lows, at 606. Geez, to almost $8. Oh my gosh, what a move there. C3AI made a big move. Wish is starting to climb back. Some of these companies, definitely have questionable business models, and when do they reach profitability? But some of them, look at Teladoc. Teladoc, I actually really like Teladoc in a major way, and that's one of those companies I actually think can get to profitability over the next 1 to 2 years. Certainly not in the next year, but after that, I think they'll get to profitability the following year. If you look at ARK Invest, bouncing back extremely strong here recently. If we take a peek, ARK is up almost 20% from the lows. Wow, actually over 20% from the lows now for ARK. Incredible. For an ETF in a matter of days. That's the thing. It's not like, oh, this has been playing out for like 3 months now. That's in a matter of like 2 days, 3 days. In a matter of 3 days, ARK has climbed 20% on a major ETF that is super popular. That's quite a move, right? But you can say, well, it's been hit so... When these things get hit this hard, right, and the selling pressure subsides, as soon as you get a little bit of legit buying pressure come in, these spikes are insane, right? The hood today up about 4.7% there. Palantir with another good day, 4.5%. That stock off its lows, it's up about 18% now. And once again, 3 trading days, right? 3 trading days. We already talked about the Chef. The Chef is up about 18% or so from its lows. SoFi is kind of a slow and steady one as far as the comeback goes. It's not as drastic as many of these other companies, right? 12.64%. I heard they got a big downgrade this week. I'm going to have to kind of check into that there. So I think that pretty much wraps up about what I'm looking at here, but just a kind of we already looked at those, but just kind of a crazy market time we're in right now. And, in these sorts of markets, you got to remember, if you're buying stocks out there, you got to think about the next 3 to 5 years with these stocks. If you think you're getting great pricing over the next 3 to 5 years, you have to take advantage of those deals, even in a market that's starting to come back pretty fast. And I'll give you a good example. Coming out of the March 2020 lows, when we still had a lot of bad news, coming out of those lows, a lot of folks didn't add to stocks because obviously we had a lot to be worried about. And not only that, but they looked at it and they're like, oh, these stocks are probably coming back too fast, right? But you got to understand, when some of these stocks have been hit 70, 80, 90%, how much more downside does it have? PayPal is trading at $90-something. Sure, anything can happen in the stock market. Sure, PayPal can go down to 70, but it begins to get so unrealistic, and you're hoping on these scenarios kind of playing out, right, that aren't likely to play out. And the problem with a lot of folks is if it gets to that price, then they're like, well, maybe I'll fall to 50. So maybe I'll wait till it hits 50. And it's like, at the end of the day, if PayPal's going back to 300 plus, which it probably is over the coming years, it doesn't matter. You just got to get in that stock. You got to get your shares at it. And if it goes down more, great, buy some more shares over time, right? As long as you're in a good financial position where every month, at the end of the month, you have money to funnel into your accounts, you're in a position of power when it comes to investing, right? And as long as you're in that position, you're there. And to kind of wait around to hope things drop more, something like that is just, that's what I call hopes and prayers investing. And that's not something you want to do there. So that's my opinion on that. So anyways, guys, hope you enjoyed this. Always much love and have a great day.